Welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. In front of your screens, you have Euro USD. That's the 4-hour chart. We will be presenting mostly in the daily chart. I would prefer this as I would require some detail here. Overall, we're going to be mixing technicals with fundamentals today, once again. And starting with EUR/USD's 4 chart, we will be noting that the pair has been moving in a sideways fashion. A small change would be noted as practically the pair hit a new low on Thursday. So could lower the S1 to 1.0790. Sorry. That creates a wider corridor within which the sideways movement of the pair is moving. So we tend to maintain the bias for the sideways motion to continue, and that should be obvious also in the daily chart. Here you go. You can see it right here. The RSI indicator is slightly above the above the reading of 50, implying some slight bullish tendencies, but in my opinion, that's more like a rather indecisive market. I would require a clear direction of the RSI indicator towards the reading of 70 before I'm calling out any bullish sentiment among market participants for the pair. For bullish for bullish outlook, we would require the pair to breach the R1 1.0895 and start aiming for the R2 1.0980. On the flip side, though, we have to note here that we expect the ECB to start cutting rates in its next meeting on Thursday, which may start weighing on the euro side of the pair. And that could create a bearish outlook, i.e. breaking the S1 1.0790 and start aiming for the S2 1.0730. Okay, let's have a look at USD/JPY. It's the daily chart. And definitely let's clear the rectangles. One, two. Here we are. Now, if we drill into the 4-hour chart, that would be more obvious. We had a small correction lower for USD/JPY right here, practically reaching as low as 1.5640. That's 20 pips lower than previous support line. At the same time, I would be lowering also the R1, not all the way up until here. And that would bring us to the 157.95. That's it. Let's lock everything in. Let's also readjust the upward trend line. It's a make or break position here. Should the price action clearly break the pre-mentioned upward trend line and remain in a sideways motion between the 157.95 and the 156.40, that would force us practically to switch a bullish outlook for the pair. Let's drill to the daily chart. For a bearish outlook, we have a rather high bar. the pair has to drop, breach the 156.40, and actually reach as low or even breach the S2 153.65. So that seems to be a remote scenario for now. On the other hand, a bullish outlook could be maintained should the pair actually breach the R1 157.95 and start aiming for the 160.20. Yet on a fundamental level, I would be highlighting that the pair is already at very low levels for the JPY side. And that may be tempting BOJ to actually intervene in the markets once again. And definitely should the pair actually breach the R1 and start aiming for the R2, the temptation may become too strong for BOJ and it may actually intervene in the markets. Thus, such intervention would be to support the JPY side of the pair and could drop the pair lower. Once again, for the time being, we see the case for possible stabilization of the pair until the market decides on the direction of the pair's next leg. On the other hand, we have to note that we have an upward trend line which tends to support the upward movement, yet for that to be verified, we would require the pair to breach the R1 and start aiming for the R2. Let's have a look at GBP/USD. Cables daily chart. Let me readjust the chart a bit. The pair is about to breach the S1, however, the S1 has to be lowered. Let's drill into the forward chart for more detail, and we can see that the support actually is at this level, and that would be the 1.2680. We are now in the forward chart as we have mentioned. We expect the pair to maintain a sideways motion for the time being between the S1 and the R1. But note how the RSI indicator below the forward chart has breached below the reading of 50 and is currently aiming for the reading of 30, implying some bearish tendencies on behalf of the market. The price action seems to have breached the 20 moving average, which at some point was providing some support and is now lower. The Bollinger Bands, though, on the other hand, remain pretty narrow, which tend to imply low volatility for the pair, which could allow the sideways motion to continue. Should the pair actually breach the S1 1.2680 clearly, and that would imply practically also a breach of the 100 moving average, which is the green line here, and the 200 moving average. So the pair has to drop as low as this. Then we may be talking about a bearish outlook here. Let's have a look at USD CAD. By the way, let's not forget that we have BOC's interest rate decision on Wednesday and Canada's employment data on Friday, along with the US employment report for May. This is the daily chart of USD CAD. We can see clearly a sideways motion in a rather wide corridor, which is formed between the S1 1.36 and the R1 1.3727. I would expect the sideways motion to continue given that the RSI indicator below our chart is practically oscillating around the reading of 50, implying a rather indecisive market. There are no major deviations of the RSI indicator from the reading of 50. So for the time being, we tend to maintain a bias for the sideways motion to continue, especially given that the downward trend line has been breached. For a bearish outlook, we would require the pair to drop below the S1 1.36 and start aiming for the S2 1.3525. While on the flip side, should the bulls take over, I wouldn't be surprised to see the price action reaching new peaks higher than these ones. So the price action has to breach the R1 1.3727 and start actively aiming for the R2 1.3785. Let's have a look at the Aussie. Readjusting the chart. Tight sideways motion, which becomes tighter even still. You can see how these two peaks suggest a lower resistance line. I wouldn't say no here, but I would prefer these lines to be more valid, and I would expect the price action to remain in the boundary set between the R1 0.6710 and the S1 0.66. We're talking about a 110 pips wide corridor. We may be seeing here the price action remaining in a sideways motion given the flattening out of the Bollinger Bands, and I would also note a relative flattening out of the 100, that's the 100, yeah, and the 200 moving averages. Also note the RSI indicator, which remains close to the reading of 50, also implying a rather indecisive market for the pair ahead. Let's have a look at WTI. Okay, the price action has dropped below the 79.50 resistance line, so that has to be changed. Let's reposition the labels. Starting with the R3 at 83.70. The R2 being set now at 81.10. The R1 at 79.50. The S1 at 76.65. The S2 at 74.45. And the S3 at 71.50. Now WTI, we can see a small positive market reaction during today's Asian and early European session about oil prices. However, the rise seems to be material, and that's despite OPEC's announcement or decision yesterday, which highlighted as a possible instigator for a bullish movement. That does not seem to be the case. Oh, I'm a bit worried here. I'm a bit worried in the sense that the price action remains in sideways motion between the S1 and the R1, that's clear. Maybe there are some bearish tendencies and they become obvious if you have a look at the RSI indicator, which has dropped below the reading of 50. Once again, it's actually at 40, which may imply a buildup of bearish sentiment. On the other hand, fundamentally speaking, the price of oil may prove to be too low for Saudi Arabia and a number of other oil-producing economies. So they may be trying to fundamentally push the price of oil upwards, possibly above the reading of 80. So for a bullish outlook, we would require a clear break of the R179.50, possibly also of the R2 81.10. That's a little bit optimistic. On the other hand, should the bears regain control over the price action of oil, then I would expect the price action to drop below the S1 76.65 and start aiming, if not breaching, the S2 74.45. Even lower than that, we note the S3 71.50, and at this point, I would be noting as an ultimate support line this true here at 67.90. Let's color this in green first of all. Sorry, we could easily raise this to 87. Once again, sideways motion seems to be in place, but there are bearish tendencies. And for a bearish outlook, we would require the commodity's price to breach below the S1 76.65 and start aiming, if not breaching, the S2 74.45. Let's have a look at gold. Let's clear the chart. Let's correct the labels. Now, gold has been rather inactive. That's understandable given that also the US dollar has been inactive. I would be a little bit worried about the release of the ISM manufacturing PMI figure today. And I'm highlighting this for gold's price given the negative correlation of gold with the US dollar. Should the release actually show increased economic activity in the US manufacturing sector, that could provide additional support for the US dollar. And in such a case, we may see gold's price slipping. On the other hand, the forecasts are for the ISM manufacturing PMI figure to actually rise but remain below the reading of 50, implying another contraction of economic activity. Should by any chance the indicator's reading fall below its current reading of 49.3 and actually, if possibly, even below the reading of 49, I would expect a weakening of the USD, which in turn could support gold's price. And that's understandable given that we have also, in such a scenario, a wider uncertainty about the economic outlook of the US. Let's not forget the market's reaction on the release of the ISM manufacturing PMI and non-manufacturing PMI figures last month. Now, the readings dropped both below the reading of 50, implying a contraction across sectors in the US economy. And that tended to weigh on the US dollar. I would expect that should we see a similar scenario right now, which may more or less actually intensify also the calls for the Fed to start cutting rates rather earlier than later, then we may see the USD weakening, and at that point the risk would be on. Thus, we may see gold's price benefiting from the weakening of the USD. The big test, though, for gold's price is expected to be the release of the US employment report for May. That's in Friday. I think the market will start focusing more and more on the release as the days progress towards Friday. And we may see that should the non-farm payrolls figure actually be on the rise, which is expected to do, it's expected to rise to 190K, which is actually a quite solid figure. It may not be impressive, I understand that, but it's not something which one could dismiss easily. It tends to imply that the US economy still has the ability to create new jobs. And that could provide some support for the USD, especially if it's accompanied by a possible tick down of the unemployment rate. Now, regarding gold, there are some slight bearish tendencies, and they are more obvious by the RSI indicator, which seems to have remained below the reading of 50. On the other hand, that's rather uncertain given that it remains close to the reading of 50. So for the time being, I would expect a sideways motion given also the inactivity of the USD, yet some bearish tendencies may emerge. So there's a small warning here. For a bearish outlook, I would require the precious metals price to drop below the S1 2275, which provides support here, and start aiming for the 2200. That was a prior resistance line, now turned to support. On the flip side, should the bulls take over, I would expect the price action to rise, breach the R1 2360. That was a level that provided resistance right here. That was about 4 days ago. And start aiming for the R2 2430. Mind you that the R2 is an all-time high for the precious metal. Let's have a look at Dow Jones. Now for US stock markets, it's an interesting reaction. We had the conviction of former President Donald Trump. If you recall, there were a number of analysts which had highlighted the bearish perspective for US stock markets should the former US president actually be convicted. That does not seem to have been realized. On the contrary, the Dow Jones was able to rise even substantially. Let's have a look how much. That was on Friday. About almost 800 points. Should the index continue rising after bouncing on practically the 38,000 support barrier, then I would expect it to breach the R1 39,140, a level that was providing or aimed for at various points in time here, with the next possible target being set at 40,000 for the bulls. On the flip side, should the rise of Friday be a mere correction and the downward trend line be enhanced, then we may see the price action of Dow Jones actually breaching the S1 38,000 and start aiming for the S2 37,100. Okay, let's have a look at S&P 500. If we see a similar movement, I think we will. Yep. Now, at this point, we tend to note that there is an upward trend line. Okay, it may be not so exact. Let's correct this. There you go. So you see an upward trend line which has been guiding the index since the 19th of April. On the other hand, we note a relative stabilization of the index around the 5,275 support line. And that tends to imply some stabilization. Should the bulls be able to regain control over the index's direction, we may see the price action rising, possibly reaching, if not breaching, the R1 5,400. On the flip side, should the bears take over, we would expect the price action to drop, breach the 5,275, breach also the pre-mentioned upward trend line, which would be a more solid signal that the upward movement has been interrupted. Yet for a bearish outlook, I would also require the index to breach the S2 5116. Okay, let's have a look at NASDAQ. Let's zoom in a little bit. Let's readjust the labels. So we see how the price action on Friday forcibly broke the 18,500 support line. And definitely that's not the S3, that's the S1. The price action used the S1 practically as a platform today to start rising. I would say that there seems to be an interruption of the downward movement of the past 3 days of Wednesday, Thursday, and Friday. And I would expect the price action to actually start rising, possibly aiming for the 19,300. On the flip side, should the bears regain control over the index, we may see it dropping, breaking the S1 18,500 and start actively aiming for the 17,800. However, that's a little bit long term. Okay, at this point, we had some requests about Boeing. Let's have a look at that. Let's drill into the daily chart. We do not need so much detail. It's a very, very interesting chart. Sorry. Let's add some labels back to the forward chart. Let's visualize them on all time frames. Now, we had the question whether it's a good time to start buying Boeing or not. Back to the daily chart. And actually, we had some viewers which have mentioned this scenario. But to their defense, Boeing's share price is pretty low. And we can see that even more clearly in the weekly chart. There have been lower points, that's true. But actually, it's not bad point to start buying. The other problem, though, here is there's wide uncertainty. There's very wide uncertainty on fundamental level for Boeing's share price, which seems to have stabilized for now in a corridor, pretty wide corridor between the 188.20 and the 258.35. The problem is that one cannot know how this will evolve, in the sense that, on the one hand, Boeing is a company which needs to remain there. On the flip side, though, one can never know when the next wheel will be getting off an airplane of theirs and start reeling down the runway, or what headlines will come up at which point, which could be have an adverse effect on Boeing's share price. So, in my opinion, Boeing is quite a risky share right now. Once again, for the time being, we tend to maintain the bias for the sideways motion to continue between the R1 and the S2. As a possible mid-level, I would be noting the S176.60. Let's have also look at the competitor, Airbus. Daily chart. Okay, let's visualize once again the labels. To the daily chart, let's widen this. place the labels. Now, to tell you the truth, I was expecting Boeing's share price to benefit more from the weakening, Airbus's share price to benefit more from the weakening of Boeing. That does not seem to be the case. And actually, we have to readjust them a little bit, the pricing. And definitely, we have to correct the S2, place it on this true here. Let's raise a little bit the R1. At 159.85. Color this in red as well. So there was a nice upward movement, which was very clear. And then we had a downward motion, which was interrupted. Let's also correct the contents of the labels. We start with the R1 at 159.85. The R2 at 163.30. And the R3 167.35. Now with the peak of our chart being all the way up here at 172.55. Okay, we have locked in the resistance levels. Let's have a look at the support lines. Starting with the S1 at 156.30. The S2 at 152.77. And the S3 at 147.65. Okay. Now the downward motion has been interrupted after bouncing on the S2 152.77, has risen, breached above the S1, breached above the R1, and peaked at 163.30, then corrected lower, once again below the 159.85 and above the S1 156.30. At this point, allow me to include a small rectangle showing the sideways motion. So we have a stabilization of the share's price, which is similar to Boeing on the reverse. So we expect the sideways motion to continue between the R2 and the S2. It's a very wide range. We're talking about $11 almost. It's actually 10.60 almost. So that's a sideways motion, which is pretty wide in my opinion, but it's still there. On the other hand, you have some slight bearish tendencies for Airbus's share price, given that the RSI indicator is below the reading of 50. Actually, it has hit a ceiling at the reading of 50 and corrected even lower. And that tends to imply some bearish tendencies on behalf of the market, maybe some predisposition. I would like to have a look also at the Bollinger Bands at this point. Interestingly enough, the price action bounced once, two, three, four times on the lower Bollinger Band and corrected higher, dropped, once again bounced on the lower Bollinger Band, corrected a little bit higher. Okay, there may be some difficulty for the bears here. Let's have also a look at NVIDIA. And going to the daily chart. Yo, that was a wide correction lower. So we had a strong upward movement, some consolidation of the price action. Now we have a renewed upward movement. Which intensified about a week ago, 1.5 weeks ago, and now has been broken as the price action consolidates lower over Thursday and Friday. Let's have a look at the resistance support lines here. Definitely the R2 has been turned into support line. The R1. $955, sorry, 1070. S2 being at 955. And the S3 at 847. Sorry, 830.47. Let's place some renewed upward movement here. We're definitely going to be lowering the R1 at 1,158.40. Let's place new resistance lines at 1,220. Could go higher. 60. In red. So we expect a consolidation of the price action of NVIDIA. Let's not forget the stock split, which is underway and could fundamentally affect the share's price. But fundamentally speaking, I wouldn't be surprised, given the AI friends in the market, to see NVIDIA's share price rising even further in the future. However, that remains to be seen. It's quite uncertain. That should sum it up. From all of us here at IronFX, best wishes for solid trading.
Hi everyone, welcome to today's webinar. For today's session, we're talking about custom indicators and EAs on your MT4 and MT5. So let's just go ahead and get started. As per usual, we're starting off with our risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. Disclaimer, this information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. I'm Melanie, and I'll be your speaker for today. I'm an investment analyst from Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We'll look at what are custom indicators on MT4 and 5, what are some EAs that you can use, various types, and where to find them, how do you use them, and how do you backtest them. Okay, so if you guys have any questions throughout the webinar, feel free to just pop them into the chat and I'll be happy to answer them. Okay, so what are custom indicators on your MT4 and 5? So they're basically independently developed in MQL4 by a user, functions as a technical indicator, and are basically graphical displays of custom calculated formulas. So here's an example of a custom automated daily and weekly pivots indicator. You can see here the daily line is the purple line, weekly is the blue line, and then our monthly pivot is the gray line. Another example of a pivot points indicator. You can see here, it basically works like your normal pivot points indicator where it has your pivot point, your S1, S2, and R1, which are basically your support and resistance levels. So those are pretty simple indicators. Here is an example of a more complex custom indicator. So this is on MT4 and it's for the pair pound dollar on the H1 chart. So we can see that for this particular indicator, it uses the moving average cross over the trend following strategy. So this custom indicator has multiple confluences such as moving average, ADX trend, and trend signaling on the higher time frames. So this shows us that custom indicators can be pretty flexible in terms of confluences, and users can be creative with it if they decide to create their own indicators. Okay, so what are some expert advisors or EAs? They are basically developed in MQL4 as well as 5, and it's a software that automates trading functions based on algorithm. So it basically notifies traders of trading opportunities and suggests trades that can be profitable. Different types of EAs. We have the scalping EA, news trading EA, breakouts EA, and hedging EA. So it really depends on your trading strategy and what exactly you are looking for. Here's an example of an automatic trading EA. You can see at the corner here, it tells you the spread and it tells you a suggested lot size, what margin you should use, leverage, take profit, where you should place your take profit, stop loss, so on and so forth. Similarly, here's another automatic trading EA, but it tells you the same thing. Okay, and another one, pretty much tells you the same thing, the account's profit or loss, account equity, drawdown percentage, spread, lot size. So where do you find these EAs and custom indicators? You can find them on your MetaTrader market page. Some tips is to purchase from sellers with excellent reviews and to be careful of any advertisements and to test these on demo accounts so that they don't affect your capital. Next is Fiverr. So it would be helpful to engage a coder if you have a specific strategy for your custom EA. This also allows you to white label your service after licensing your custom EA. Okay, Forex Factory website. So we have mentioned Forex Factory in the past, but more so for the economic calendar. But they also provide you with some recommendations for best expert advisors that are free. Or, of course, you can simply Google it as well. So how exactly do you use them? So you double click the EA that you would like to use on the Navigator tab on your MT405. Enable the following options and then click OK. So you allow live trading, allow modification, and DLL imports. And yeah, there you have it. So now let's look at how you can backtest these indicators. So just an overview of backtesting, it basically uses historical data to test your strategy and allows you to understand the behavior of your strategy so that you can fix it and improve it. So what exactly it is, backtesting in trading is basically simulating the process of trading while using a set of rules over previous price data to see how much money would have been made or lost if a trader had followed the same strategy. So it's basically a retroactive test where a trader enters a set of values or rules like a currency pair, time frame, and technical indicators. Then the automatic backtesting trading system can analyze the tick data and show you what would have happened if you had taken the chosen strategy. Some things to watch out for would be your net profit or loss, volatility measures, averages, and ratios, and analyzed return. Okay. So what is tick by tick backtesting? It's basically it uses in-depth data and volume weighted into price. It involves creation of elaborate models and it prevents unexpected surprises and it also simulates your trade execution. So this is an example of what your backtest report looks like, and there are 4 key areas that you will need to look at when you produce your backtest report in MT4. So that would be those highlighted here, your total net profit, maximum drawdown, total trades, and profit trades. Okay, so what exactly they mean? Firstly, total net profit is the overall financial outcome of trades generated by a trading system if it had been used in the past. So it indicates the potential profitability of a strategy, although it doesn't guarantee future performance. This parameter provides an estimate of the potential gains from using the system. Secondly was maximal drawdown, and this refers to the largest loss experienced by the trading account in both monetary value and percentage relative to the account balance. So a lower drawdown is generally preferred, but it depends on the trader's risk tolerance and account size. So for example, if a trader has $10,000 with a risk tolerance of 20%, the maximum drawdown should not exceed $2,000. Number 3 is total trades. And this represents the overall number of trade positions taken by the trading system. So it helps to assess whether the strategy is aggressive or moderate by comparing the number of trades to the investing time frame. So for instance, if there are 200 trades in 3 months, it indicates an average of 3 trades per day, making it suitable for intraday trading. A smaller number of trades may be better suited for mid-term trading. And lastly, the key point that we will look out for is profit trades. And this indicates the number and percentage of profitable trade positions out of the total trades. It reflects the trading system's win ratio with a higher percentage, indicating a more successful system. Okay, so some common backtesting mistakes would be having unrealistic backtest results, do not overmine your data, getting the timing right, and incorrect assumptions. So how exactly do you backtest them? Okay, so you basically want to open your MT4 and click on the strategy tester button over here. But this feature is not available in the mobile version of MT4. Okay, and then this is what it'll look like. Click on Expert Advisor, input the EA that you're looking at. Okay, and then once it fully loads, you can click on Start. Yeah, so basically these are the steps. Select your EA, set your dates, and press Start. Okay, and then this is the Graph tab, what it basically shows you. And if you want to look at your results, that's just basically the Results tab. So it'll tell you the number of orders that you've put in, the lot sizes, and the profits or losses that you've made. Okay, and lastly would be your report tab. Yeah, so you can see it's basically a summary of your trades. So your profits, your losses, yeah, number of long positions won, short positions won, so on and so forth. Okay, so how do you decide whether to use MT4 or MT5? Let's do a really quick, brief intro to both of these platforms and compare them so that you can see which is more suitable for you. Okay, starting off with our intro to MT4, when you go in, this is what the interface looks like if you've never used it before. So it was launched in 2005, and MT4 has become the industry standard for Forex trading. It's renowned for its user-friendly interface, robust functionality, and extensive range of features tailored to both novice and experienced traders. So its key features include ease of use. So its intuitive interface makes it accessible for traders of all skill levels. Platform's design, you can see, is pretty simplified. So it's easier to manage your trades and conduct your technical analysis. Charting tools. So the platform offers advanced charting capabilities with various timeframes and a wide range of technical indicators. So you can see all of the tools that you need are right at the top here, or you can click on tools as well. Yeah. So you can customize your charts and indicators to fit your own trading strategy. Automated trading. So this MT4 also offers the ability to support EAs that we went through earlier, reducing the need for constant manual intervention. Security, MT4 is quite secure since it has data encryption to ensure the safety of trades and user information. And lastly, community and support. So a large MT4 has quite a large active community of users who share their strategies, their tools, insights. So it is a pretty collaborative trading environment. Now if we look at MT5, So MT5 was released a couple years after MT4 in 2010, and it was designed to offer enhanced trading capabilities and broader market access. So while maintaining many of the features that made MT4 popular, MT5 introduced several improvements and new functionalities, such as its multi-asset trading. So the main difference between MT4 and MT5 is that MT5 supports not only forex trading, but also stocks, commodities, and futures, and even crypto as well. So it makes it a multi-asset platform suitable for a wider range of financial instruments. Enhanced charting and analysis. So MT5 includes more time frames and built-in technical indicators than MT4, along with additional tools for comprehensive market analysis. So we'll go through what some of these differences are in a bit. Next is another difference is the economic calendar. So you can see below it offers you this tab, this calendar tab, and it features an integrated economic calendar, providing traders with real-time news and data that can impact market movements. Hi, yeah. Has this webinar been? So this webinar is being recorded. If you would like the recording or you would like to rewatch this webinar, um, feel free to email IronFX, the team. I think it's on the website. Yep. If you just search up ironfx.com, it should be on the website. Just email them and they can help you out. Okay. Another difference is the improved order management, which is more sophisticated order types and execution options. It also boasts faster performance and deeper market depth information. So that basically includes, it basically provides you greater insight into the liquidity and order flow of a given instrument. Okay, so MT4 and 5, some key differences. So here's a table, a summary of all the differences between MT4 and 5, but basically it depends on your needs and preferences. MT4 remains a favorite for forex traders who appreciate its simplicity and the extensive library of available EAs and custom indicators. And on the other hand, MT5 is better suited for traders looking for a more versatile platform that supports multiple asset classes and advanced trading features. Both platforms are available on various devices, including our desktops, mobile, and tablets. So you can access the markets from anywhere, anytime. Okay. So some key differences in the tradable instruments we mentioned earlier. MT4 only allows for Forex. MT5 offers commodities like your metals, energies, stocks, as well as indices, and some crypto as well. Time frames. So MT4 only offers 9 time frames, which would be your basic M1, M5, M15, M30. Hourly time frames include your H1, H4, daily, weekly, and monthly, which is enough for swing and long-term traders. But if you prefer to get a deeper analysis, you can look at MT5, which provides 21 time frames with way more minute time frames and hourly time frames, as well as the daily, weekly, and monthly time frames. Okay, MT4 has 31 graphical objects such as lines, channels, the gun, and Fibonacci tools, shapes, and arrows to predict future price movements. So if you think that's enough for you, MT4 might be a better option. On the other hand, MT5 offers 44 graphical objects, including geometric shapes, channels, Gann, Fibonacci, and Elliott tools, and more. Okay. Next is trading orders. So MT4 offers 4 types of orders: the buy, stop, buy limit, sell, stop, and sell limit. Whereas MT5 offers 6 types of pending offers. So pending orders rather. So there are those that are offered by MT4 and 2 more: the buy stop limit and sell stop limit. Okay. And of course, we mentioned earlier the economic calendar. So there is no built-in economic calendar in MT4, whereas MT5 offers an integrated economic calendar with useful and real-time info about macro events. But if you are more inclined to use MT4, there are a bunch of free economic calendars online as well, so it's not too much of a worry. So if you take a look at my screen now, this is just an example of the economic calendar that we prefer to use. This is forexfactory.com, and it has a bunch of indicators. But if you click on a date, you can look at we prefer to look at the weekly forecast. So the events for the upcoming week. But if you prefer, you can look at the entire month as well. Okay, so by clicking on this filter here, I normally like to look at the medium and high impact events that are indicated by this orange and red icon. Yellow is low impact, gray is bank holidays. So you can also look at the different currencies. You can narrow it down to just the currencies that you're trading and the different event types as well. So yeah, then we have all of the events for the upcoming week at one glance, and the currencies that they will be impacting, the forecasted values, previous values, and it also tells you the actual data once it's released. There are a bunch of forums you can take a look at as well. Yep, some news as well from the different news outlets over here. So yeah, that's so MT4 not having a built-in economic calendar isn't that big of an issue, since there are a lot of economic calendars out there that are free to use. So the one that I went through earlier is forexfactory.com, but there's also investing.com, or Baby Pips also has a bunch. Okay. So MT4 versus MT5, which is a better pick? So some pros and cons of MT4. Pros: MT4 is perfect for beginner traders because it's easier and simpler to use than MT5. And MT4 is the best platform to trade Forex, as it was initially designed for the needs of Forex traders. Some cons is that it has fewer trading options than MT5, and it's a little bit slower than MT5. MT5 allows trading Forex as well as stocks, indices, commodities, and crypto, has more charting tools, technical indicators, and timeframes than MT4. Some cons is that the MT5 can appear to be more complex platform for beginners, and there are fewer robot and expert advisor developers who opt for MT5. Okay. So some tips for MT4 and MT5. Firstly would be to use the MetaTrader Market Scanner. Second, create custom indicators, use EAs. So we already went through at the start how to create your own custom indicators and use EAs. Fourth will be to manage your risk, and we'll go through some tips on how to do that. Stay disciplined and have realistic expectations. So let's talk a bit about how to manage your risk now. So here we have the most basic trade management tips. So here by confluence, we are talking about Fibonacci confluence, which basically occurs when two or more Fibonacci levels line up in the same area. But this also applies for resistance areas or any pivot point levels. So for your stop loss, we typically recommend you to place it um, beyond a key level. And the reason for this is because more often than not, price is attracted to such strong areas of confluence. And if your stop loss is right before instead of beyond it, you'll most likely get stopped out before the market reverses. This is one of the reasons why most people wonder why they got stopped out right when the market starts to reverse and then complain about stop hunting. Okay, and as for your take profit, we recommend you to place it before any key levels. Reason for this is because when price reaches the Fibonacci confluence area, there's a high chance that it won't be able to go beyond it, and instead of reaching your profit target, it reverses back to your entry, or even worse, your stop loss. So that's also one of the reasons why people complain that the market is being manipulated because they missed the take profit by 1 pip. Okay. So in this example here, we are going in for a buy entry. So obviously we would place our take profit above and your stop loss below. So in this case, when you're going in for a buy entry, we'll place our take profit and stop loss below your key areas or your Fibonacci confluence areas. Okay, so for buy entry, place it below. For our sell entry, which is in this example, we'll place your take profit and stop loss before any resistance areas. So basically like above it, like this. Okay, so again, for buy entries, we'll place it below your key areas, and for sell entry, we'll place it above it. That's an easier way to remember. So yeah, this is the proper stop loss and take profit placement to ensure that you maximize your wins and minimize your losses. Okay, so some other trade management tips, especially if you are trading on your MT4, MT5, would be to use a trading journal. So here's some tips on how you can set it up. And it's relatively straightforward. So firstly would be to choose a format. So this can be, you can opt for a physical notebook, a spreadsheet, a digital document, or specialized trading journal software. So it all depends on your preferences and the level of detail that you wish to track. Number two is to decide on the categories. So this basically means to define the categories of information that you want to include. So it can be the date and time, trade symbol, entry and exit prices, position sizes, stop loss, take profit levels, trade duration, and trade outcome. You might also choose to include trade rationale, market conditions, and emotional state. Capture trade details, that basically means recording any relevant information and being consistent and diligent in entering the details accurately and promptly after each trade. Analyze trade performance. Basically, you are going to regularly review your trading journal to analyze your trade performance by looking for patterns, trends, and areas for improvement. Emotional factors. So this is quite important and quite often overlooked because it's important to take note of your emotional state during each trade. So how you would record it would probably be taking note of any emotional biases such as fear, greed, or overconfidence that may have influenced your decision making. So, this information will help you to become more aware of your emotions and develop strategies to manage them more effectively. Review and adapt. So, again, you want to learn from your past traits and experiences, identify areas for improvement, and refine your approach. And lastly, maintaining discipline, basically ensuring that you treat it as a crucial part of your training routine and commit to using it consistently. Okay, some benefits of using a trading journal include performance analysis, which is basically allowing you to analyze your trading performance in a systematic and objective manner. And secondly, learning and development. This is pretty straightforward, but basically it's reflecting and learning on your decision-making process, identifying errors or missed opportunities, that enables you to continually refine your trading strategy. Emotional awareness, we talked about this already. Risk management, we talked about this as well, but it basically involves recording position size, stop loss levels, risk to reward ratios as well, so that you analyze how effective your risk management strategies are. And that's quite crucial as well. Trade planning and execution. So this basically involves providing a record of your trade setups, including the analysis and rationale behind them, and accountability and discipline, pretty straightforward, and confidence building. So a trading journal can help you to boost your confidence by documenting your successes and your learnings, and you can review your progress regularly and build confidence. Additionally, having a record of successful trades can serve as a reminder during challenging times, reinforcing your belief in your trading strategy. Okay, that's it for my slides. We still have some time left, so let me just pull out our charts and we can take a look at maybe one or two charts together. So if you have any requests for any charts that you want me to go through, just pop them into the chat. Okay. Are there any specific charts that you guys want me to go through? Okay, I see we have requests for AUD. So let's take a look at that. Okay, so I like to start off on our weekly time frame so that we get an idea of where prices are headed towards. Now, on our Aussie dollar, you see prices moving in this descending trend line. And you can kind of see price approaching the trend line again. Now, on our daily time frame, prices are kind of fluctuating a bit more, moving sideways. Now, on our 4-hour time frame, it's also kind of, it actually looks like prices are moving upwards here. Okay, let's see if we have any trend channels or trend lines here. Okay, we actually have prices moving in this ascending trend channel. Okay, so I'm just gonna go ahead and analyze this on our 4-hour time frame. So I'm gonna place my pivot over here. You can see it's a good habit to try and pull back your level as far as you can so that you can see how significant that level is. Okay, so you can see here I have a couple of swing highs that have tested this level in the past. Okay, this is my pivot. And my first support, or rather my first resistance, maybe up here. And my first support over here. Okay. Okay, now I'm going in with this Nike tick shape here, which we call Fibonacci extension. And 161.8 lines up nicely with our pivot. Okay, now I'm going in with a retracement. Okay, and you can see my 50% lines up with my pivot. Again, going in with my projections. Okay, my 61.8 lines up with my pivot as well. So you can see this area here where my pivot is at is a pretty strong confluence area. Okay, because we have 3 levels lining up. Okay, I think that's all the levels that we have. Okay, I'm gonna move my first resistance down. Maybe over here. Okay, and I'm gonna go in. So we are expecting price to continue in this ascending trend channel. Okay, but we are aware of this confluence area here as well, which might have a bit of resistance. Now let's look at our indicators. We have our Ichimoku and MACD. So price is moving above the Ichimoku cloud, so it's giving us a bullish signal. MACD is also giving us a bullish signal, so it supports our analysis. Now if we look at stochastic, okay, stochastic isn't telling us much. If we look at RSI, okay, on our RSI, we see prices moving. We see prices moving in this ascending trend line. Okay. So yeah, pretty bullish signals here, just highlighting this confluence area with multiple swing highs and 1 swing low, as well as 3 Fibonacci levels forming a confluence area. Okay, any other requests? Okay, any other requests from you guys? Okay, if not, I think that's all the time we have for today. Thank you guys so much for joining me. If you guys found this session helpful, and I'll see you guys again next week. Thanks, everyone. Bye.